Alright, good evening everyone. If we could do a quick audio-visual check, let me know if everything's good to go, then we'll dive straight into it. JR says good. I tend to trust him. You wouldn't lie, would you, JR? Hi, Ankit. Hope you're well, mate. Oh, he said goof? I suppose so. He did say goof. I'm guessing it's okay given people are replying. So, first things first, as I said, I'll keep the filler short. We can talk about all that kind of fun stuff afterwards. First of all, thank you to Bybit for sponsoring Technical Roundup, the newsletter as well as the YouTube channel. Their links are in the description below. Make sure to check them out, show them some love, and that would help us out a lot. So, with that out the way, let's get straight into market stuff. And if this sounds like your cup of tea, or if you're just here for the hit and run, still leaving a like and subscribing to the channel would be hugely appreciated. So, start with Bitcoin. I'm going to take away my levels for a second. We'll do a kind of eye test analysis, and then maybe add a bit more depth with kind of extra levels. So, as you can see, currently, it's Operation Save the Monthly, which is pretty common for Bitcoin, whereby we are all the way back at this 10.7 level, 2 weeks or so left until the monthly close, and it remains to be seen what this monthly close is like. I don't entirely blame you if you are skeptical of monthly closes, given how deep price went after 2 positive monthly closes, in the last couple months, but it still, I think, would be good evidence of a successful macro bullish retest if we manage to find strength through this 10.7 area, okay? So that operation is currently ongoing. We can use weekly closes to kind of guide us as to how successful that's going to be, so basically using the weekly time frame to build a monthly picture, but I don't want to read into it too much with this much time left to build the candle structure. So on the weekly, again, without adding levels quite yet, things look positive, right? We're sort of coming off of an area of prior highs, however you want to define it, whether you want to use this close or, the highest closes in the range, the mid/low 10k area. That's currently where the bounce is coming from. I think the only conflicting signal in terms of reasons to be cautious, well, there are a couple. The first is the weekly close, right? So the last weekly close kind of closed below most of those areas. That's not it. Here we are. Closed below most of those areas, whether you want to use the wicks or the bodies. So on a closing basis, the weekly chart isn't that positive. When that's the case, like when you get a weekly close that looks like trash, and then the next candle starts to rally, especially early on in the wick. Early on in the week, not the wick. I always keep my kind of guard on to be sure that we're not putting in the high of the week quite early on before kind of following on the bearish candle structure. But overall, weekly time frame pretty all right if we get continuation from where we are now. I know, amazing analysis. If go up, then good. The bit of context I want to add to this area on the weekly time frame is that this is a kind of shelf that we've talked about before, which is comprised of quarterly and monthly levels, and the levels come out at 10.3 and 10.7, so I'm literally going to box it out so we know what we're dealing with. So for me personally, especially given the weekly close below the level and coming so close to 9.6, I'm pretty much going to be neutral within this consolidation, so within the red box. I'll generally be seeing that as a bearish retest as much as I kind of don't want to, and I'm happy to look like an idiot if this is just kind of the bounce and the continuation. There are other ways to get on board, but just using the tools I use, so these high time frame levels and then high time frame closes at those levels, 10.7, and obviously given the, this is quarterly and monthly structure, wicks higher, so 10.7, 10.8, that type of area. Red box is resistance for me. So I think the higher probability longs under my system, if we get a weekly close through the red box, we're almost certainly going to retest the high of this consolidation. And to me at that point, that's just not very good, or not as good resistance. As you know from previous live streams, markets don't generally do really ugly fake outs twice. So once you have the break at the level, let's say in this case, it comes back. If it pushes into the level and then doesn't find resistance and closes above it again, it's usually the case you get continuation either directly or at the level itself. So if we apply this kind of price pattern, I suppose, to the 11.5k level, what I've marked out here was the kind of failed reclaim event. And I'm not really a fan of price pushing up and finding resistance at 11.4 if we manage to clear this whole kind of mid 10k area. That just seems less likely to me. It makes sense to maybe be cautious on lower time frames for some sort of lower high structure. But to be completely frank with you, and I've spent a lot of time thinking about this because I just haven't had a clear read or trade recently. In terms of bias for me, red box resistance, anything above that, I'll be long biased and maybe be a bit careful towards the highs in case we get lower high rinsed. That's kind of the view on Bitcoin. You looking at these levels on an intraday basis, you can kind of see what we're dealing with. I think in terms of trading this and going away from the weeklies and the dailies and shorter term stuff, I'm not a huge fan of selling this quarterly level. I think there's a decent enough setup there, but unless I see some price action above it, which encourages me, I'm probably not going to fade it straight up. Maybe it'll age poorly, whatever. I think, as you know, I like to trade where there's space. So for continuation trades higher, if we get this kind of negative funding squeeze scenario, etc., I'd much prefer something like this. So the break of 10.7, obviously price is rarely nice enough to give me a break and retest like this. It may end up looking, as you know, from all these fancy diagrams, the break and consolidation, etc. But either way, as discussed from the higher time frame red box, I've got 10.7 as resistance. So if that breaks, then I think we get this sort of whoop-de-la-la, very technical name, failed breakdown or short-term breakdown into higher time frame levels before squeezing up to where the bulk of the trading was done, or the preceding range. So the trade idea in practical terms, I think you can make a case for A to B between these monthly levels. I'm not terribly fond of it. I'd much rather take the trade where there's more space, which for me would be 10.7 break into maybe not 11.4 directly. I think we'd have to contest with these intraday prior lows closer to 11.2. Okay, that would be a very kind of hit and runny type of setup, but really I've spent a fair bit of the weekend kind of seeing how clear my read was. I have a much clearer conviction on Ethereum than Bitcoin. Bitcoin for me is just kind of bouncing off of high time frame areas, but until that red box, which on a lower time frame is just, you know, these two levels put together, until I get a break of that, I'm probably not going to touch it at all. As I said, if you're a fan of selling A to B, go for it. Not my cup of tea. Just the context isn't there at the moment. And really another thought with the macro, again, if you're not the kind of level to level guy and you're more interested in the higher time frame stuff, even though I maybe have no authority saying this, given my amazing 11.920s entry, I still think a reasonable case, perhaps if I were more patient, as some people have fantastically pointed out, that's sarcasm. There's no shame in paying up for an entry if the market is indeed bullish and we've got a lot of space until 14k or wherever else the high time frame resistance is. Something like this, getting involved on a break through the top of the old range, I think that's a decent enough setup as well. And this actually showcases a pretty validly that point we made about the double breakout. It did so here where it closed above, closed below. So if it gets back above 12k, I don't think the trade will be easy by any means, if there's continuation to be had, but really squeezing all the way from 10 to 12, I'd be hard pressed to be bearish in that case. So long story short, for Bitcoin, if we want to focus on the high time frame stuff, I think the red box, I've got the market resistance right now, which, you know, sounds rough and sad, but unfortunately such is the game. So red box for me is resistance. Any daily or weekly strength above it, I think it's very likely that we trade through 11k, mid 11, and pretty much towards the last top. But for now, that's kind of it. Okay, that's all I've got. And you can see that here, pretty much moved from one level to the next and now at resistance. And given it's a quarterly level, it can poke higher. I know some people have got this consolidation boxed out. You know, that will be appropriate, but really this structure for me is resistance. Okay, yeah. And so for intraday, as discussed. Now ETH looks, I think, slightly worse, or at least the resistance is slightly clearer. If we look at it on a weekly basis, the weekly close from 2 weeks ago, the big bearish engulfing candle, none of that has been kind of mitigated, I suppose, or no real shift in structure has occurred to make me believe that it's somehow invalid. So if we delineate it in this way, using the lowest close and the wick of this prior swing, and even again, if you're using the consolidation itself before the engulfing candle, I think however you like to delineate the 370, 380 area, it's worth being cognizant of the case for a retest of resistance, which typically means, again, if the trend is bullish, you might not want to short retests of resistance, but you might want to wait for nicer long opportunities, which for me would obviously, materialize as a break of this area. But just to provide some context as to where we are now, I think this is a really sound level, the 360, 370 area. Even did its job a little bit pre-breakdown, and then it got completely engulfed by, where was the volatility? It was to the downside here. And so these last two weekly candles for me haven't really shifted too much in terms of what I want to see on a higher time frame to get bullish. And again, when there's so much space between breaking resistance and the next level of resistance, there's no point buying the bearish retest if you have, a bunch of space to capture between one level and the next. It just doesn't seem very reasonable in my view. So if we kind of add some context to these levels, it's the monthly 394 and the weekly 378, right? You can see that on the daily. They form, it comes out as a bit of a shelf. We could even just delete all of that and do something like this, where we can either use the lowest close or just, this whole consolidation. Doesn't really matter too much. We could literally do this, and this would be on any time frame, and I'm sure you would feel some discomfort if I asked you to market long on the underside of this structure, right? Certainly if we're looking at daily market structure, it's one of those patterns that I certainly need to see price move away from in order to get confidently long. And by that I mean you had a higher high, right? So all the positive stuff in the world and all the reasons for support to hold, and then the way it played out was all the structure failed on the way down, and more than that, the breakdown itself, or the impulsive leg within the range, right? Where's the volatility type of thing? It was to the downside, bearish market structure and retesting of resistance, right? Doesn't mean I'm screaming bear and that's it, it's over, because the macro context certainly has some things going for it. But as discussed, I think there are easier trades on the table. For Bitcoin, it's really debatable where those are. I'm just being completely frank with you. I can see this, this area just being a bit of a clusterfuck. Excuse the French, where I get stuck being bullish at 10.7, then maybe it wicks towards 11k, or even, these prior lows, and then ends up being bearish. Like, I'm probably going to keep sitting this out until I see break through the top of the range, as discussed, or one of the higher time frame levels get hit in the 9.6 and this old consolidation. Come on, I can't be the only one who's thinking, right, there are a bunch of really good levels, sort of 10.7, 11, and there's a good chance if I get involved, I'm going to eat a plate. Does anyone else feel like that? Like, with where Bitcoin is now, being like, this is good, yeah, there's a level here, F this. Because sometimes the market is like that for me, and in those cases, I look for something clearer. And Ethereum, for me, is a lot clearer in terms of structure, right? So that's the point I was making, that there's a really nice shelf, if you will, or just if you want to use the candle, doesn't really matter too much, the 370 to 390 area. And you'll recall when we were trading above it, surprise, surprise, that was kind of confluent support, where 390 is the monthly, and then 370 is kind of where wicks would be admissible in terms of support. Now, pretty much, to keep the technical explanation simple, because it is, that area has turned to resistance, right? So if we have a box for Bitcoin between like 10.4 and 10.7, whatever that was, there's also a box for ETH between 378 and 394. So I simply think the easier trade would be either this or simply this. Okay, so the break of the upper boundary at 394, at that point we could make a really strong argument for a monthly time frame wick, which would be this price action here, in an area of high time frame support, and then we get that type of continuation like we discussed on Bitcoin. Or alternatively, if you just don't want to do business around the retest area, which is fine as well, as discussed earlier, in a strong market, no real shame in paying up for a breakout. And if you thought there's a lot of space on Bitcoin in terms of next levels of resistance, really for me on the monthly, if this is it, I haven't got much until 670-ish, right? So again, when there's a lot of space, you got to trade carefully. And when there's a lot of space, the requirement for your entry to be pristine is reduced, right? And this also applies to time frames, and something I've generally referenced a fair bit. So if you're trading, the hourly time frame or any kind of intraday stuff, especially when you're trading level to level, between A and B, say, there's really not a lot of space in price, in the size of rotation terms or price points or percentage terms or whatever you want to call it. So the margin of error for your entry, unless you want to be somewhat martingaling offside, doing something crazy, you got to keep things tight on an intraday basis. Now that's good because, you get more risk-defined setups and more R, whatever that means. But it's also more difficult because, again, your room for error is reduced. However, if we're trading, higher time frames, swing trade type of stuff, I suppose a large portion of the appeal there is that in relative terms and absolute terms, typically the space that you'll get to trade kind of using the same system, level to level, it's a lot more forgiving on the higher time frames, and typically you've got a lot more room to capture between one level and the next. So that's why I always reference space when I talk about potential trade ideas and potential concepts. If you trade on the higher time frames and or trade where there's more space between levels, which typically comes from the higher time frames, it's kind of self-referential, I suppose. The requirement for a perfect entry or anything like that is essentially reduced, right? And you just got to be there to act on the setup rather than nail some sort of reversal. I hope that makes sense. So long story short, Bitcoin is like a bit fuzzy. If this is going to continue on bullishly, I want to see a break of 10.7, which will take us into the 11k area. Define that however you want. And for kind of macro bullish continuation, I think the top of the range through 12k needs to break before we have that conversation. But with the market right now, you can see it's gone from a re-established level of support to resistance, and that's it for now. That's the Bitcoin summary. For ETH, similar type of summary, whereby most of the higher time frames are, slightly technically clearer. Most of the higher time frames are suggesting resistance at two levels, basically the 370s and the 390s. So the nicer trades for me would be either through, so near current prices, through the bearish retest levels at 390s, which is the previous range low, into the top of the range at 400 or 430s, or again, the pay up scenario is the break of the 430 level, and at that point we target higher time frame continuation. But with those caveats, we're currently retesting the underside of old support, so I've got the market at resistance. Reasonably clear as far as price lets me be. Does that make sense to anyone? Helpful perspective? Any comments, feedbacks, concerns? Also, we're almost at 100 likes to the video and I haven't even begged once, so you're all the best. Thank you so much for showing support using that button on your screen. I appreciate it. Vishnu says, what do you think about the CME gap? I don't really think about the CME gap. Marga says, could you please look into bear scenario? I think we have, right? And I suppose the bear scenario is that we are retesting on both Bitcoin and ETH old or higher time frame support from the underside, right? So on Bitcoin, I think it's slightly harder to carve out on Bitcoin, to be completely honest. But still, in terms of structure, I suppose the bear case is weekly engulfing into retest of quarterly and monthly resistance at 10.3 and 10.7. And on ETH, it's pretty much the same, where we had previous monthly and weekly support at 370 to 390, and we're currently retesting the underside. So that's the case to be aware of, at the very least, if not the bear case, or however you want to label it. But I think that's something we've discussed. Thanks, John. Thanks, John. Yeah, so if you enjoyed that, make sure you're subscribed to the channel as well. We're live every Monday, Wednesday, Friday. Would love to have you somewhat consistently, or just to ask questions for us. Another point I want to make, I'm going to take a bit more of a relaxed tone. Just want to keep the Twitter people on here. I love you all, and I'll be uploading more clips to that platform as well. I've been paying some attention to the S&P. I've got pretty much 3 levels for this thing, which is the all-time high range, or the pre-breakdown range, if you want to use that terminology. The way I've delineated it will be familiar to those who watch my stuff. Lowest close, highest close, and let the midpoint land where it may. So from the current anatomy of the weekly chart, right, you had the breakout from the range, a really bearish looking high time frame candle which engulfs that breakout, I mean, technically not on the closing basis. Whatever. A lot of selling on that break through the range, or, you know, the clear breakout. And then it's really the last weekly close that is kind of rough. Why? Because yes, while it did bounce from the midpoint, it technically closed back within the range, right? So if you think about deleting the last 2 weeks of price action, if we just kind of get rid of this, if I were to, and I know there's a replay mode here, but, you know, I'm very caveman-ish in my trading view. So if I were to show you this chart with a breakout and retest, you know, you could very much make the argument that, yeah, it's some selling, but it was kind of absorbed, and you just get some volatility on the reclaim or the breakout, but the market looks fine as long as this level is held, right? But now, the developments since then have been kind of not great, where you got a close back within the range, right, and below previous week's low, and where the market is right now, this kind of Monday pumponomics, you can see it's retesting the top side of that same range. So I've got the S&P at resistance. Does that make sense? Like, does this, again, not a market I trade, so take my convictions and charts and whatever else with a bag of salt at the very least. But I think in terms of big levels and high time frames, you could still kind of follow along. Now, if the S&P does sell off and we get another leg down into, you know, the 3,300 handle or lower, it's harder to be bullish Bitcoin, right? Because for that to be the case, you would need to argue that with a bearish S&P, Bitcoin's going to decouple, but, you know, in the bullish direction. And I just think you're kind of asking a bit too much in that case, or, you know, there's a higher burden of proof type of thing. So that's where I've got the market right now, and I guess that's an extra bit of confluence or something to watch, that the S&P doesn't look amazing as long as it's below 3380s, which is this range boundary I'm paying attention to. I'm confused about first test, best test. I've been burned by big green red candle. When to wait for retrace before entry, and when to do first test, best test. Go to my Twitter feed. I tweeted out like a live stream session where we did a clip on first test, best test, and I think that'll answer your question. Sushi Lover was scaring me about no sound. Yeah, so I guess we can kind of chill out now, because the summary stuff on live stream is always hard. Like when I do the recordings for Twitter, I take my time, and usually the market's a lot clearer as well. So I'm like, yeah, this. In this case, it's like, it's a bit tougher, right? So if the market with where it is right now, certainly with the way I've got the map, the market mapped, right? Just viewing it through my levels, which I think are significant, which matter, etc., all that fun stuff, right? Just looking at it with the context of my levels, if the market were to do this, literally hit the top of this level, meander around a bit, and then hit 9.6, I'd be like, yeah, well, that's bloody obvious, right? We had the engulfing candle, we retest the top of resistance, blah, 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 and then it goes from one level to the next. Of course it did. What else could it possibly do, right? And then, if we even move the levels a bit, or remove it from the, remove my specific monthly levels, etc., I could very much see the case for literally one line here, break, retest, and the thing goes to new highs, and I'd have the same reaction. Well, yeah, it's bloody obvious. You big scary candle, an uptrend into support, amazing level, continuation. Whenever I have that sort of discussion with myself, I do not fucking trade any size whatsoever, right? And if I do, I'm just punting intraday sort of stuff. It's one of my kind of shit tests, if you will, for... Oh god, the algo hates me because of all this bad language. But it's one of my shit tests for, I suppose, how ready I am, or how much conviction I have in the market. If I can make both a bullish case and a bearish case with equal force, and either scenario makes me think, well, that was bloody obvious, and it's not skewed even a little bit either way, gosh, at that point, I'm not betting big, and almost certainly not taking swing trades, right? Now, again, that comes with experience. Obviously, if you try hard enough, you can, impose a bias in either direction and sort of sell it to yourself. But whenever I objectively, as far as possible, have such a polarized view of the market, I don't bet big, and I'll just trade intraday, if that. Anyone else do that? You kind of argue with yourself, and when no one wins, you're like, right, I should wait. Kea Brand says, "Hey Cred, simple question. How are you? I'm very well, mate. How are you doing?" Brendan asks a question that I simply cannot answer. How do you think GAN looks within the Gaussian channel? I have no idea, mate. I do not use those tools. Paul makes a good point. He says no bias, just A to B trades. You know, I'm kind of very much level to level, as you know, but sometimes, especially when it comes to, I mean, there's still conviction between and at levels, right? Not all levels are made equal. Not all contexts are made equal. So I think at a certain point, there does have to be a judgment call as to, am I fading here? Am I fading there? Am I going to wait for A? Am I going to wait for B? I think there is that element of discretion. Yeah, we're going to check some alts and stuff. I just wanted to make sure we're sort of clear here. So yeah, I think if you're short-term trading and you want to get on the long side, something that I think is reasonable, as discussed, 10.7 I've got as big high time frame resistance all the way up to kind of this cluster here, right? But generally something like this, break of 10.7 into 11.2. Into these prior lows, I think that's on the table. Oops. If we get squeeze continuation, yeah, that's just about it. That's just about it in terms of high time frame stuff. And for ETH, if we look at the same stuff on intraday basis, you can kind of see how, I mean, I'm not making up these levels of resistance, right? That we had. This is the, you know, wrote about it for ages, and we spoke about it, the monthlies and the weeklies, at 370 being the extreme, 390 being the big level. And where are we retesting it from at the moment? Well, from the underside, so it's resistance. That's just about as straightforward as I can make the technicals. And intraday support at 350s. I would quite like for price to keep this range where we're stuck between resistance delineated by those two levels, the 370, 390, and the support at 357 to hold. I think there's plenty of space for intraday punts within here. We'll have to see how that develops. I'm probably not going to rush into anything on the kind of Monday squeeze. And just like with Bitcoin, where's the long with space? It's something like this. Through 370, conservatively into 390, and then you hold out for a banger into kind of 420, 430 level. That's about the best I can give you, to be honest. Let's talk about some other stuff. Is that somewhat helpful? Again, some weeks I will legit commandeer Casual Friday from the dark and be like, listen, mate, you know, go for a jog. Let me do this. I've got so many good trade ideas and thoughts and stuff I want to discuss, and, you know, we'll go through it. Other times I'm there like, I wish my stream were another day so price could unfold a little bit, you know. But it's what we have to deal with as traders, analysts, or whatever we are. Gosh, I keep getting asked about Elliott waves, GAN fans, and indicators. I'm glad that we have a new audience, but my friends, unfortunately, I do not use any of those tools, and I try not to opine on tools that I do not use. So I'll be of very little help. ETH BTC looks fine. It's all right. It's still generally holding the range. Resistance at 36s, and well, I guess there's support now at 31s. I'm not a fan of its current market. So look, kind of high time frame perspective, and also in case you're living under a rock, Technical Roundup, the weekly newsletter that I write with the Duck, it's free and it comes out every Tuesday at 8 UTC. The link in the description, or just technicalroundup.com. Go subscribe and you'll get all the levels. And, you know, some people have pinged us with really scary screenshots about, you know, the results they've gotten just with pinging from one level to the next. I'm not advocating for that, but, you know, there's some value there of some sort at least, if not just for my horrible jokes. But anyway, so from a high time frame point of view, like, as long as support holds and this ETH BTC within this range, that's fine. Nothing bearish about it, right? So as long as 31s is okay, and ETH BTC has been generally quite a good proxy for the market health as a whole, because the rally's been Ethereum driven, so it makes sense that ETH BTC is worth looking at. Unless you want to make an argument that, you know, Bitcoin's going to take over still in the bullish direction, which is, I think, would need substantiating. I think it's much more likely that if we get another leg or like a proper sell-off, that Ethereum is hit harder than Bitcoin. That seems to make sense to me intuitively. But for bullish continuation in the market, I think ETH needs to keep going, and that will be reflected in a stronger ETH BTC. So as long as this level's intact, 31s, that's fine, and this is just like a range in part of an uptrend. What I don't like is the market structure at the moment, and that's because it sort of looks like a deeper retrace ETH, whereby you have a higher high, right? And then you should be finding support either at the level itself or some sort of higher low structure, but you don't, right? So if we look at recent market structure, where's the impulsiveness, or which side has the volatility? If I'm just going to start making up expressions this live stream, apparently, well, the lower low, recent market structure, clear lower low, closing through here, and then we got a bounce into resistance, which could be the high time frame, or at least daily time frame lower high. Okay, so macro structure, fine between levels, right? But market structure on this time frame, just not inspiring confidence at the moment, right? So ETH BTC, kind of whatever. We'll have to wait and see. I mean, just look at this. I'm not gonna have crazy strong views while this is going on. Brendan asks a very good question. Maybe the duck can answer him. Have you guys thought about switching up the alts you cover in Technical Roundup? Yes. I feel as though EOS, etc. are largely cooked and much more interesting alts. Thing is, lower caps is always a bit of a... like, I know it's become... I don't want to poke this hornet's nest too much on live stream, but just because of how DeFi has materialized, it's somehow become acceptable for those with perhaps a larger audience to advocate for the purchase, or at least, how do I put this nicely? Basically shill their bags, even though the market cap and or volume may not be up to the standards that we're usually used to, for those who feel some sort of sense of responsibility, etc., etc. Long story short, we need to be careful with the altcoins that we choose for Technical Roundup, because there are certain ethical and moral limitations to the, there are market cap limits, let's put it that way. If you have any questions, just DM Donald. He has amazing answers for everything. BCH just looks crap. I'm not going to go through all of these because some of them are just dog poop, and this is certainly one of them. EOS, yeah, this thing has just been range bound and no sort of exciting reclaim whatever stuff. A lot of these just had like a one pump and that's it, back to where they were. Litecoin, XRP, the ones I do want to talk about. So XTZ, this might end up doing something eventually, right? Because we have this weekly range that prices in, and we've gone from failed breakout at the top of the range and now kind of poking around the bottom of the range. So if this thing... Do you remember how much hype there was on XTZ as well, being like the next link? That was mental. I literally had a video in my to-do list, watch list thing to discuss whether there's any validity to Tezos being the next link in terms of its price actions. Absolutely mental. With nothing to show for it on the chart. Surprise, surprise. But just like there was, a very solid breakout attempt on one side of the range that then took price to the other side. I'd quite like, if this consolidation is to hold, to see the mirror image of that, just obviously on the bullish side. So something more drastic below the range low at 2450s to then send price to at least the range midpoint and the range high. So even from kind of level to level, I mean, there's 20% there and whatever. Enough space to punt, but I want to see something failing with higher conviction. Not these wicks type of thing that take price up. The same kind of virulent attempt to break the range which fails. I think that'd be okay. But for now, I mean, just moving within a consolidation, right? Let's talk about Link. Someone has to, because Link seems to have fallen off the radar, which is kind of crazy. I guess it made sense from a social attention point of view at the Zeus Capital. You could literally refresh Twitter and absolutely everything was about Link, and that was fun, but it seems to have died off and gone from one extreme to the next. Also, we're on, 166 likes, guys. Thank you so much. You're all the best for clicking that button and making me smile, and Donald beat me less when we're doing our live stream reviews, so I appreciate you looking out for my health. Link BTC and Link USD are interesting, because the BTC pair, you're kind of looking at it like, yeah, I mean, if not here, then where in terms of a bounce? And then you look at the USD pair, and you almost want nothing to do with it, right? So they're very structurally analogous or similar. Maybe analogous is a bit too extreme, whereby they essentially trade well within consolidations after impulse moves, right? And those are the kind of structures you have to reference, simply because it's a high, trending, high volatility asset, or it was, I suppose. So you need to make do with what the market gives you in terms of levels. It's not always going to give you, the range, the breakout, blah, blah, blah. You just have to deal with what you're given. So with the BTC pair, you had like a bullish setup. You got a close below the range that was impulsive, engulfing close above it, and now price is at support. It's not the kind of price action you want to see if you're playing a quick move after a failed breakdown. Normally, the failed breakdown or failed breakout setups that work well are really violent ones. We have kind of one candle reversal, and then those trapped at the lows get squeezed as the market pushes up. Whenever you get this kind of reclaim, and then the market does nothing, they're still technically fine setups, but my conviction tends to be lower, because if the logic for the setup is that these guys are trapped, right, or there's someone really on the wrong side of the market, you'd expect the market or price to exert pressure on them in those uncomfortable positions to force them to puke and unwind, etc., etc. So whenever you get a nice bullish setup and then no one kind of steps in to take advantage of it, you sort of feel a bit With where it is right now, this is kind of the only place where it makes sense being bullish, like the bottom of support after a relative drop. But yeah, that's kind of Link. As I said before, you always need to consider, where is the easier trade, right? We discussed this on Casual Friday a lot, so I'd love for you to go back and watch like bits and pieces of it, although it's not timestamped, so maybe you shouldn't. But we talked about kind of the easier trades on the table, and the good example being the Bitcoin breakdown at 6K, right? 6K is broken. How do I get long? Do I buy the dip at 5, 4, 3, and then hold it for like 2 years, and then maybe sell 6 because I'm nervous, etc.? Or do I just buy the 6K reclaim and then have an easy ride, right? So I suppose you should always try to look for it. Will the market likely offer an easier trade in this instrument within a reasonable time span or whatever else? And with so many markets, there's no kind of rush to do a certain amount of volume or, trades in an instrument. So in this case, yes, you could kind of have the intellectual tug of war towards buying reclaimed support at whatever 13, 14K, but something like this is just, I think, much easier. The break of the lower high and the cluster which led to it, you see, is pretty much the last upside resistance on the chart. I think if that goes, there's a really nice, stress-free, likely continuation trade towards price discovery. And I think that is more attractive than what's currently being presented. Yeah, and with the USD pair, as discussed, it's kind of, the BTC pair, you can make an argument for it being bullish because of the reclaim, even though it kind of looks like ass. With the USD pair, it's essentially the same, except there's no bullish reclaim to be seen, right? Which kind of sucks. So again, we're dealing with these consolidations or these clusters which form between trends, impulse, consolidation, impulse, and this is the support resistance structure. That's kind of the anatomy, if you will, of where these boxes come from. And not only is volatility fallen off, but yeah, same kind of thing. Support, turn resistance, and there are some nicer levels, I think, below market where I'd prefer to do business rather than kind of hold a spot with where the market is right now. I think you could argue I think, is Don short this? I think he is, right? I think he's short from higher. I think he shorted this, actually. And this was a setup we discussed in the newsletter, so if that's not enough reason for you to go jump in, then I don't know what is. But yeah, nothing really jumps out to me. If you're not, as I said, if you're not like the duck and you're not in from higher, I wouldn't say that any bearishness is invalidated here, but I just don't know how I feel about, a week at this level and then selling the underside of it again. What I wouldn't mind is a push this time towards the upper boundary of the level, and then see if you can get short into a short-term play. I mean, towards the bottom of the range, and then maybe lower targets if it goes. But I feel like most of the stuff is kind of, yeah, look, you can tell just by how I'm trying to get the words out of my mouth that my conviction isn't sky high here. Let's talk about the easier setups. BAM or punting some sort of long structure at the next high time frame support. Those are the easier trades. I think if you missed the bread and butter at 17, this is just kind of less attractive, and you could get squeezed by a little bit into the $13, $14 handle. I think that's fair. I thought credit. So my age appears to range from 50 to being a teenager. Wow, the truth will surprise you. I haven't looked at a lot of these in a long time. I wouldn't be surprised if some of the majors, which are like trying to be DeFi but aren't, kind of float back to breakout levels. Certainly if they can't hold momentum. We've seen a lot of that, and certainly the majors, like they've just really been suffering against Bitcoin, and even the big weekly pumps they've had haven't been able to shift much structurally. And I really think one's attention should be on Bitcoin, ETH BTC, and the S&P, if you're kind of the major macro type of guy, just to get the high time frame context. Oh, someone asked about FTT. Good point. I need to add that, actually. FTT, BTC. And then FTT. Is it still FTT perp? No, it's not. FTT USD. There we go. Yeah, I mean, I think we discussed elsewhere. Don't exactly remember the context, but I'm generally not a fan of being bearish the CEO of FTX, because he seems to be on an absolute mission to sort of create an oligopoly over our crypto trading experience. I made the joke, like, you know, basically the Bezos or something, where, you know, we all become FTT citizens. We all get FTX microchips to be able to trade. You can only trade on all of, you know what I mean, this kind of dystopian future where Sam controls everything. So certainly ambitious, and as you've seen through the sushi stuff, and, you know, not someone to bet against. So maybe I'll have to build a basket with like FTT, Sol, and all this other stuff to just bet on Sam. But I don't have any strong technical views about these instruments right now. Oh, BNB. This is hilarious. It just seems so kind of range bound with this monthly retest, and then, you know, CZ will never let an opportunity slip by to jump onto a narrative, right? I think that's a reasonable assessment. In terms of where the market is right now, I can't imagine getting into a trade anytime soon on this. I'm not a fan of fading with anything up with regard to where it is right now. And the monthly has quite clearly, well, at the moment, right, monthly close, etc., but like, if we're not being terribly reaching by saying it's a monthly range breakout. So monthly resistance is towards the highs, dips towards the pre-breakout consolidation. Might try to catch something if the market's kind enough, but I really doubt it. So into kind of this level here. So that will be fine. At resistance right now, into the previous range. Okay, I think it's the best I can do for BNB. Where does that level land? About 22.5. Support. If this just keeps going, let me actually just add some weight to this. Hold on, let's do a proper job here. So this is the old range. It's currently retesting. I don't love this. Whatever. This is the old range. This is a nice level within the range that it broke out from. So setup-wise, within the range continuation from A to B, or alternatively, something like this A2, and then you've got the old levels. What do you think about SBF and sushi thing? Ooh, I don't know. I kind of feel like we haven't seen the full scope of information with that whole saga. Does anyone else get the feeling that we'll kind of get little drip feeds of news or maybe some sort of reveal or leak in the weeks and months going forward about the whole debacle? Maybe someone writes it up or does some investigative journalism and it's like, yeah, there's slightly more depth to this than we first thought. That's kind of my view on it. Unless you're asking in terms of technical stuff or ethically and all of that, it's a bit of a circus, really. I don't think SBF was the chef either, if that's 5 a.m. Someone asked about gold. We can certainly look at gold. I think I had some levels. Don't know where the hell they went. Well, given that we're kind of in price discovery territory, I think 2 levels make sense. One is the first kind of wick on the highest month, and then the body, right? And then on the other side of that, we can essentially add. So we're basically dealing with, again, purely technically not a market I trade, etc., etc. But we're dealing with this consolidation here, and I've simply defined it with the highest close and the wick, just to kind of give some perspective to where we are now, and then the bottom side of the range, which just happens to be a nice support resistance flip type of structure. So that kind of, from a high time frame point of view, just leaves gold with 3 really nice high time frame levels for me. Above 1910s, I'd have to presume continuation, given all that price discovery stuff. Below that, if support 1 fails, I still think there's very significant level at 1820s as kind of support 2. And then to get swing bearish gold below 1825, and again, these are monthly levels, so I need at least weekly weakness at the monthly level until 1560s. Right? Because if you consider this on a high time frame basis, and not a market I trade again, so, you know, take it with all the qualifiers and caveats in the world. For reasons discussed, we've just broken out of the range, right? Price is broken out of this consolidation. And I've just added some, and this is support, made up of 2 levels. Again, not the whole box is really made up of 2 levels that matter. So at the moment, we've got a break and a retest of the range. Okay, so if this is technically valid, it should really keep going. Yes, the easiest route of continuation would be through 1910s, but it can dip as low as 1820s and still not break structure and still qualify as a bullish break and retest type of thing, right? In order to get bearish this, or at least have a higher time frame basis for being bearish, I think if the 1820s level fails, then we have to contend with this being the deviation from the prior range, so like a failed breakout, whatever. And at that point, your first trouble area, if you fail above the range high, would be the range low, which I've got at 1560s. Is that somewhat clear? I think the SPX correlation has been kind of a bit more important than gold, but I'm happy to be corrected on that fact because that's not something I've looked into terribly closely. Some other US stuff. Yeah, a lot of these. Someone asked about DOT. Which one? I mean, both are kind of the same, whereby I had an impulsive move. Look. Impulse move, right? Consolidation. Impulse move. Consolidation. The first time, the consolidation acted as support. Now it's acting as resistance, right? And I think the USD pair, we can make a similar type of pattern. Impulse move, consolidation, Generally, the structure acts as support. Again, not too bothered with the exact levels. Similar type of thing. Another leg up, and then the current range or consolidation with the USD, with the BTC pair at resistance. If the USD pair rallies, I think, where is this level roughly? The lowest close, $5.5. I'd have that as resistance on the old range. Yeah, fish hook pattern and whatever it's called. This sort of thing that we talk about pretty much every week because of, you know, there, you know, and then when that structure breaks down, that's an argument for trend reversal, right? Or at least a trade towards the closest similar type of structure, but then, you know, as price rallies, or alternative, if you want to get long, just like the link example, you just get long if it breaks, and then you target the high and higher, and you sell the retest if you're a technical guy, right? I don't know why people are guessing my age. I'm 23 years old. It's pretty straightforward information, not something I've tried to hide. So yeah, that's DOT. I don't know what to say about Sol. I think there's enough here for me to do much. Yeah, I just need more to work with. I think if you're playing Sol, needs to be a more kind of fundamental basis for it, unless you're really short-term trading it, but I don't. So yeah, I had Wi-Fi on the watch list. I don't know where it went. I think I can use this, right? This is the Binance Linear Futures contract. Is it? Have they got a perp now as well? Okay. I think this is a pretty decent level here, if we're still using TA for this sort of stuff. This cluster before the all-time high structure. We just talked about DOT like 2 minutes ago. Where were you, mate? I think that's a decent level. If this thing's gonna keep going, you can see you got a failed breakdown. It's sort of head and shoulders-y, but basically a real deep stab through support. The failed bearish retest sort of thing looks really scary, and then the next candle just pin bars up. So support, failed breakdown, kind of expecting support in the grey box again, something like that. That would make sense. Again, I haven't taken a single trade on this thing, so my pulse may be off, but we just have to deal with what's in front of us, right? Yeah, wish I had a spicier live stream with some trades to talk about, etc. But really, not much has triggered, and certainly not a whole lot makes me want to jump in with where the market is right now. I hope you're talking about the market being stale, Red, not my presentation skills. It's only been a weekend, mate. But yeah, yeah, that's really it. In terms of opportunities, as I've discussed, I think for me, realistically, unless I get something really clear and really bearish at 10.7, in which case I'd short it to 10.3, unless I get like a jump out type of setup there, I'd probably look for 10.7 into these prior lows at 11 for an intraday trade. Higher time frame bullishness for me would need to be either at a high time frame level like 9.6, and basically at that point taking us back within this consolidation. That's where I'd like, you know, I think my high time frame bull goggles would be on, or alternatively, simply just a break through this range, which has been hell. I think if we trade anywhere near this consolidation or the top of this range again, I think it's unlikely. Says the guy who bought 11.9 and ate shit, but I think it's unlikely that it holds a 5th or 6th or whatever time it'd be at that point. Okay. That's with Bitcoin. One of those weeks where I've just got like sort of levels in place, but I can't see myself really screaming at any of them near current prices. And with ETH, very similar type of scenario. We're currently retesting a big area which I don't want to sleep on, and I just think, look, with where I think the summary version really is where Bitcoin and ETH are right now, like the current price line you see on the chart. I just think that the better longs are through this area, not into it. That's it. That's the kind of one-liner I can give you. The better longs are through this area, not testing it from the underside. That's about it. Can we short the 3 guys who dislike this video? No, but you can like the video, which will send the KJB to their door. I think even with 10k, right? Obviously I think funding flipped on the higher low, if I'm correct. But even if we're kind of viewing this chart here, if it didn't, it's one of those scenarios where if it just consolidated and dumped into 9.6, would anyone be surprised or find that totally unreasonable? Probably not, right? So it's really a kind of coin toss with this consolidation, and it's now reached the top of the range. So I'd rather do business back within, you know, catching the move into these prior lows rather than trying to be a hero and chase a move like this. I just don't think there's a good chance I get anything reasonable in terms of continuation entries if I try. Yeah. Market resistance. That's it. That's the answer to all our questions. The answer to the title. I've got the market at resistance, and I think there's a lot of space to be captured to the upside if this area breaks. But until it does, I probably can't justify any more shitty trades with how the last couple have gone anyway. What about you guys? What do you think? Do you have any crazy reads with Bitcoin where it is right now? Is this like a breakout and then we go back within the range? You think this is a trap and, you know, this is the high? Let's get an idea of what you think. Red says giga short to 9.9. So I think Red's argument is that, you know, we're dealing with the old range here. Whatever. I mean, this makes it look bad for Red. Hold on. We can save you, Red. Don't worry about it. Let me draw a more bearish line for you. Hold on, guys. We need to save Red. He's really worried because the way I drew my box, it looked like he was shorting the break and retest of support. So for Red, whatever, this cluster, the top of the range, no, that's too wide. Here we are. Just making shit up at this point. Resistance on the pre-breakdown consolidation, and he says giga short to 9.9, which I can only speculate he just means the bottom of the range here. So from range high to range low, that's Red XBT. Let's see what other people think. This isn't some farming, you know, sentiment thing. I'm genuinely interested. Because my summary, as I said, I've got resistance here, but overall I'm kind of uncomfortable, especially with ETH retesting what it's retesting. 9.9, Charlie's got a similar view. This is a trap. In which way, David? I think we barked right back up to 11.5. That's pretty plausible. It's a trap. Short it. I've been short since 10.6. Nice. Take 11k, we go to 13k. I pretty much agree. If there's, you know, empty skies between 11, that area, and whatever price you want. I sold most of my spot and wait for 8.8 at least. Okay. Quite the diverse array of opinions, as expected. I think most of them are bearish, or the majority is bearish, but we'll see. How long does it take for you to come up with all your Twitter jokes, puns? No time at all. I'm normally just on my phone taking a piss and I see something and, you know, respond. This is another thing I think is worth mentioning. I'm not picking on anyone from the chat. I love to hear from you, but I think it's very much worth, if you're like, I remember seeing this mistake done a lot of times in 2017, And guys would essentially go 100% crypto, 0%, 100%, 0%, and they try to sell everything and then say I'll rebuy at a much lower price. And I just think that's generally an endeavor that's not worth it for most people. Like whether you're a trader, you're an investor, or however you want to classify yourself, going from such extreme allocations, like, okay, I'm 0% Bitcoin, I'm 100%, 0, 100. Certainly if you're using it, if you're selling your spot to do it, which was, popular, if you're going to hedge your full exposure, just use derivatives. That's what these products are for. The inverse futures allow you to lock in a kind of dollar value per Bitcoin with a one-time short. And then that also means, because these derivatives and these contracts are liquid, if you're invalidated or you want to get back in, there's no huge issue. But if you're really kind of tossing around your spot like that, with the on-ramp or fiat or maybe some, if you're not using either derivatives, and even with stable coins and stuff, I think that's worse than using derivatives. It's just worth being careful. And you generally don't want to just lose your full position unless you've got really good reason to do so, high conviction, etc. Certainly if the trend is up, and I think at that point, at this point, it's like I suppose we can have that debate, and we'll know in hindsight, as helpful as that is. But yeah, the traders who are able to go full hedged are the ones who have really clear invalidation and know when to buy back in and can just swallow that bullet. Whereas the less trader-minded or more easily swayed, or I guess just less experienced practitioners, just don't get lost or caught in that trap where, you're either hedged or you sold and the market goes up a lot and you think, okay, when it pulls back, I'll buy it, and it pulls back a little bit and you think, okay, now it'll go a bit lower, and then it goes up again. Do you know what I mean? Just having something, I think, in most cases is better than having nothing. What an amazing words of wisdom. But yeah, let's recap with the weekly time frame, because you won't see me on video until next week. So Bitcoin, I've got still at resistance, unfortunately, or like at the top of resistance on this time frame at 10.7, and it comes from this quarterly and monthly shelf between 10.3 and 10.7 here. You can see why that is. Close below, currently retesting the top bit. That's why. Levels above market, 11.4k, but probably 11.2, or just if you want to just box out this pre-breakdown level, I think that's the first trouble area to the upside, and I quite like the chances of it breaking eventually if this current retest fails. And then FTA to the downside, 9.6. So bearish retest at the moment, right? Just have to tell you what I see or how my charts are set up. FTA above market, mid 11k or low to mid 11k. Support, if this is a bearish retest, well, first of all, 10.3 from level to level. On a higher time frame basis, 10.3 to 9.6. ETH, very similar vein. Weekly breakdown into a retest of structure at 370, well, 380 to 390, that area, however defined. Support, intraday at 350, but really the kind of, if this is a bearish retest on a high time frame, we kind of have to look at high time frame support, which would be the 290 or 300 handle. If this bearish retest fails, right, and it'll be pretty obvious if it does, you'll be able to see on the chart the big candle through this area. Like, trust me, you won't need to ask if the bearish retest has failed by looking at the technicals. The next objectives for price would be 433 at the top of the range, or pretty much the high resistance, right? And then much higher at closer to 700. For the S&P, if you want to keep a track on that, I'm simply using three levels: the all-time high range, support or range low, 3220s, current resistance or the range high at 3380s, 3381, and the midpoint at 3302. Somewhat clear? Helpful? Does that provide some context? Do you kind of see where I'm coming from at the very least? Trust me, more than anyone, I would have loved to have just a very unambiguous, clear, bullish close on everything. Failed, bearish, retest, reclaim, etc. But I with the charts at the moment, I'm just unable to reasonably hold that position. So I just got to. The best I can do is tell you what I see, and then we can talk about how stupid or unwise that was, the next week. 245 likes. Wow, amazing, guys. I know it sounds very cringe, like, oh, thanks for all the likes, your support means so much, but it's genuinely makes a difference, and pretty cool of you to help us out like that. I think we'll wrap up. Makes sense too. I think my high time frame stuff is clear at the very least. Just on some notes to round up. First of all, thank you to Bybit for sponsoring Technical Roundup. Their links are in the description below. I think they've still got that promo going on where you literally type in a code to the voucher box, and then if you trade, you're eligible to win a Bitcoin. I think it's one of the lowest effort bonuses you can get, which is pretty cool. So if you trade on there anyway, it doesn't hurt, right? If not, whatever. No one's gonna force you to do anything here. Second of all, subscribe to the channel if you haven't already. We're almost at 10k. That would be cool for psychological cope reasons. Maybe we can beat Bitcoin, right? So Bitcoin goes to 0, our subscriptions go to 11k, and then broke either way. That would be a fantastic outcome to this whole cryptocurrency experiment. For those of you who are hungry for more content, newsletter comes out tomorrow at 8 UTC. That is also free, and it'll have our levels, consolidated thoughts, and maybe some new assets, because a lot of these just look really trash. Okay, that'll be me off. Time to make late dinner and let my brain rot with YouTube videos or something. Hope you'll have a fantastically productive week. Look forward to our catch-up next week, where I'll either look like a genius for having the market resistance, or like an idiot who imagined that resistance exists in a new paradigm and market will be at 12k. And Donald will have deleted his Twitter account. That's a joke. I'm going to stop rambling. Take care. I'll see you for the next one. Bye-bye.